Good morning, my neighbors. Welcome to another episode of BYTTT. We got a lot of stuff that we got to go over, and I want to give y'all a nice little breakdown of some tickers. So we're gonna get straight to the charts. So let's go ahead and get to it. The first thing I want to kind of break down is the fact that NQ has been doing some very interesting things, especially after starting to head to these highs and everything else. I think knowing that they're trying to get that rate cut in September, there's an attempt of a bit of a pull down for the market. You can kind of see we're setting up what could be very bearish divergences. So even if we do get into this 845 to maybe even get to that 24,000, I think we're probably going to get a nice little healthy pullback in the middle of the month somewhere that can really rock the market. So let's kind of see this as a possible order block to probably try to hold it up. But I really think we're going to probably test like 50 moving average. We're going to test the 200 back here in April. So it's going to be very interesting as we dig very deep into NQ. But bearish divergences, they should be in some type of follow through. So I think there's some accumulation of puts that's happening, and eventually that dam is just going to break. So let's go ahead and keep on pushing. We got oil inventories that's going to be coming up on Wednesday. I do think oil as a whole is in trouble for any upside. And as we try to get into this register, we're in even lower. I think we're going to test this order block before we even go through this one. But we'll see what happens. We could test this one just so that way we can get enough momentum to get down here. Here's gold. Gold had a nice little run trying to get up to that 5,000, 3,500 level, right? And by them failing to get to that 3,500 level, it kind of gave a little bit of a rejection and put in even more bearish divergences, just like what's going on with NQ. So I'm very curious on how the market responds to that, because we did have this wedging action that was going on, and when we started to break through the top, we started pulling right back down. Here's silver trying to recover some of its momentum, which is probably going to drag gold up. And I wanted to get to that $40, but it looks like we're not going to get nowhere near it. Here's the British pound. We're starting to break through. I don't think we're going to go ahead and completely reverse this one. Check that later. I don't think we're going to completely reverse this one by breaking it out of this right shoulder area. But based on what I'm seeing here, we're probably going to go ahead and make another stab to get down to this 50% of the measured move. And then we're probably going to push right back up probably in the middle of September, assuming that this stays according to plan. Here's Bitcoin. I really thought we was going to get that 125. I really did. A lot of selling that happened at that 122, 123. So it's starting to make me think that we're sitting on an order block. Here's another way that I write my order blocks. Is basically on the wick of action. So I think that there's a lot of action, probably some more bears that's sitting right here, and they can't wait to go ahead and lock in their profits. I thought we would be above 123, 231. We stopped at 122, 319. So kind of let you know that we was $1,000 away. And here's the Russell. The Russell is still consolidating. Not much to report here, but where it is, it can give you a nice little noise, letting you know we are in the middle of the market on a lot of these tickers, and the Russell is no different. And then the last is or it's supposed to be, the infamous and undeniable strength of the market, US dollar. And you can kind of see we're building a nice little solid base in the past, 4 days almost? Oh yeah, 3 days for the most part, because this was still being created. So this base right here could be the case that makes us go back into here. Remember that fair value gap that was there? We took 1 stab, 2 stabs, 3 stabs added, and this 3rd stab was a nice rejection, and we're building the base here. Prepare for some puts. That's what it looks like to me. All right, go ahead and pull out a pen and a pad, because we're going to give you the news, and it's coming in hot. So let's go ahead and get started with our economic calendar. quite a few things that's coming in. We're gonna get inflation rate, CPI. I think this is what everybody is waiting for. But there's some weird things that's going on with the economic calendar. Fed Barkin is gonna be speaking. Fed Smith. You're gonna get a monthly budget that's gonna go ahead and key off on some of the things. It's gonna key off on some of the things that the Fed is looking to break down. If we go down into Wednesday, we're gonna get some European inflation data, but then mortgage rates sneaks on in right here as far as mortgage rate index, as far as their applications, as far as their refinance index. Like, these things are going to tell you what's going on with housing. Oil inventory is going to come in around 10:30, but I don't know if y'all noticed something. 17-week bill auction, Gooseby and Bostic is going to be speaking towards the end of the day, which they're going to probably be dissecting a lot of that CPI data. And then when Thursday comes in, the strange thing is continuous jobless claim, which usually brings its volatility itself, and then PPI. So we're going to get core PPI, which is another inflation data, but it's supposed to, so if CPI is supposed to tell us how the Fed should react, PPI should be how the Feds prepare. So PPI being spaced out like this, and plus there's anticipation of Fed rate cuts in September, it's starting to make me think that they're setting something up that's going to be keyed off on the September cuts. I don't know what it can be. The reaction of the market is going to be placed somewhere around here. So Thursday is probably going to be one of the most important thing that you want to kind of look over to make sure that everything is falling in line. So just kind of keep that in mind as you're going through your trades, that if I'm not in deep profits by PPI, I might want to go ahead and cut my position, especially all your September contracts. I know you're probably like, well, that's 30 days, Jeff. Well, here's the thing. 30 days, you're going to get what I call the theta acceleration coming in very soon. And if you're not deep into your profits and something major happens in this news, it can really throw your entire market, you throw your entire position into a tizzy, and the rest of the market might follow suit. I think this is where the dollar starts to strengthen. I think when we get this base that's here, is because a lot of people are already anticipating what's going to happen with the PPI. And if that thing comes in a little spicy, it shoots this up, gets into that fair value gap, this is going to dump the market something vicious. Funny thing about it, if it's not spicy, I still don't think this thing drops. I think what ends up happening, it starts to build even more of a base, and then when the cuts come in, we're going to get an adverse reaction, or at least in the beginning. So very interesting thing that can happen. And again, I'm not saying for you to just go ahead and cut your trade and you're like, well, I could have had more profits if it doesn't go that well. I want you to just be conscious of what can happen. And then when we get over into Friday, there is imports, export, manufacturing, and my most important thing that I can't wait to see is the Michigan consumer sentiment. I think this is going to set us up for the true move for the cut. So I think massive drop, massive closes of position, massive readjustments is going to be happen, because this is the August contract expiration. This will be our third week, and I think this is going to give us a lot of information. So keep those in mind. I think that's a lot in the economic calendar for this week, or more than before. And this is probably going to be why this is probably the best reason why yesterday was the most sideways movement. Very little price action for you to be able to really make any money. All right, let's get into the other parts of the news. So the first thing, and this is something I've been talking about for the most of this week, and to be honest, I think this is where the sell-off is really prevalent. Again, This is my opinion. I am no fiduciary. All right, please keep that in mind. But I do think that it says big opportunity in these tax-free. If you don't know what tax-free, so there are corporate bonds; those are taxable. Municipal bonds are going into the government, so those are tax-free. Tax-free bonds may be short-lived. The ship is leaving the port, says a strategist. I guess that's Michelle Fox that probably says that. Who knows? Okay, so let's make sure we look at this in its totality. Let's just take a step back completely. Let's go to monthly. I kind of broke. Actually, let me bring back that drawing. Come back, ZV. Come back. Come back. Okay, there we go. All right, so let's go over to monthly, right? I kind of boxed this area out, and I did say bonds has been on a decline, but you can kind of see we've been putting in a bearish divergence ever since here to here. We have very little follow through. Doesn't that sound a little familiar? Here's our first spike down. Here's our second spike down. That failed to make a lower low, but this made a lower low. And the oscillators make a lower high. While this one was it's just this action that you usually see. So could that divergence was just to break the trend? Very possible. I might be completely wrong. Could it be that they're reloading on the bonds just on this level? Absolutely possible, but we haven't made any lower lows. I can't adjust this line. Could this death cross still continue? Absolutely, but again, we are starting to really show weakness on this trend. So I think we may get one more spike through, maybe get into that 100 level or so, and then we'll curve right back up because they'll still be in bullish divergence territory based on the parameters that you see here. And that's my question. I hear you. You're saying that the port might be leaving soon on municipal bonds. Maybe that is the case on municipals. As we get closer to interest rate cuts, no one, because there is going to be much more opportunity inside of equities because price cuts means higher prices. But the question is a lot of those higher prices already priced in because people were anticipating for the cuts and the cuts are still not here? Very possible. So I want to see what this base does before I go ahead and take a strategist's opinion. Not saying that they are wrong, but I would love to see how the market reacts, especially as we get closer to the price cuts. So keep bonds in your radar. That's what I've been saying all month in July, and I'm going to say it throughout this month of August. Betting on a bullish earnings move in Cisco System using options. I think that's not a bad idea for the most part. Now, for Cisco Systems, I would say if you don't know who they are, they've been around for like quite forever. Kind of falls into that CRM space for a while. Let me make sure. I want to say package software, right? Telecommunication equipment. That's right. They're just as old. Okay, now I remember what Cisco Systems is. So they're just as old as like companies like CRM. If we go back, you're gonna see they've been around since like mid-90s, and they brought a lot into the tech space. So looking at their, let's see, they provide network-based products and communication information. I want to say my first router at my company that I worked for was a Cisco system provided by AT&T, and this is what they primarily do. Are they a really strong stock? Well, debatable on how you want to look at it. They do pay out a dividends, 41 cents for a stock that's $70. But the problem that you have with something like this is because of this, right? Over here, we talk about this quite a bit, is the shares float. They are at 3.95 billion. So this is just a strong company, mostly used for their dividend, very light as far as movement to the downside. and that's what people usually do with Cisco. So doing an options run on this, I would say for the most part, a lot of movement has happened, right? We're talking about a stock that was around $53. It made a $20 move from April's push up. And if we look right here in August, it made $5 of that $20 move just last week. So that's about 1/4 of what this whole entire thing took about a couple of months, 3 months to do. So looking at this going into earnings, they anticipate $1 in their EPS. They do pay out dividends, like I said. $14 billion company, like I said, really, really strong revenues, really, really strong company, well maintained. So I think, generally speaking, at this point, it's just a stable stock. Not saying like a stable coin for my Bitcoin, but for the most part, yeah, to a certain degree, because this company tends to only go in one direction and may consolidate, which gives you opportunity for accumulation phases. So as far as the option trade, I don't know. Like, do I want to play options on something that could give a micro movement at any point? Just like this one. This was only 72 cents. So there's going to have to be some type of pullback. Looking at the stochastic on this weekly. Let's see if there's anything on a daily. Yeah, I see a daily pullback also. So betting on bullish, it says on the title. Betting on bullish earnings move in Cisco Systems. So I would say, could it be that the move is already done? Could we get a pullback during the earnings? I would say if you're not already in it, knowing that the earnings is going to be tomorrow night, you may want to stay away from this. But if you're locking in profits at this point, congratulations. But yeah, it looks really, really good for more and more upside after a deeper pullback. That's how I see it here. All right, so we covered quite a bit of the news. Let's go ahead and switch over and look at some earnings that's coming up. So we got ONON. If you don't know who they are, this is On Holdings. And oh, they must have morning. Yeah. Ooh, look at you, ONON. It's been on my radar for a while, and I did add. No, I don't think I added this one. I wanted to add this one. I probably wanted to add it yesterday. I think that's what popped. Hold on. Let me just do my due diligence, make sure. This might have been I wanted to add it. Yes. Oh, yeah. I wanted to add to this on yesterday. That's why it's so fresh in my mind. So I got a nice little signal towards the morning when it popped up, and yeah, shoulda went ahead and added that one. Wow, $5 move up. I anticipated it was going to do something relatively solid. We were in that bottom register here anyways, and if we go over to the weekly, it's been pushed down. They've been trying to keep this up as far as giving money to shareholders and generating more revenue. So they're anticipating this. So they must have smashed earnings. Of course, it's 6:15 in the morning right now, so we'll get the details later on. So just keep an eye on as a whole, because I think this thing could probably even shoot up even further. The biggest reason is because ever since its IPO high, it's been higher than that. So I think they're going to try to recapture that again, getting above that 55. Actually, this might not be too bad of a long-term ad for the near future. So that way you could probably break above that $60 and continue to the upside if that earnings is solid. But that pre-market does look really, really good. All right, we got Kava. That's going to be tonight. I know the earnings are starting to get a little light, right? Yeah, it's that part of the month. So let's go ahead and look at Kava. Kava, for the most part, it looks like it's also built its base too. Actually, this might be in my radar of preparing to take a peek to take it to the upside maybe. Nice little drop here coming down to this level. We put in a bullish divergence roughly around here. That confirmation is probably the crossover here, but a lot of energy has been lost on this move. But we got a nice little consolidation here, so I think this thing could go ahead and try to push on up. And I'm looking forward to this to almost like build its base here. Now, this is another one after its IPO. It's been sitting on top of it, and I think this is going to give a little bit of a continuation. A nice break above 100 will start to take out some of these fair value gaps. As far as tomorrow, tomorrow morning we have EAT International. They return $2 per shareholder. So this is a little bit on the pricier end. $1.4 billion in revenue. If you don't know who they are, they're part of restaurants. This is the ones that are responsible for Chili's, Mangiano's, and I think that's it, right? Yeah. Okay. So just those two franchises are in here. Which one is Outback Steakhouse? Maybe I've kind of mixed it up. But anyway, so this company here, they have really started to, like, especially in my area, they had like a large footprint and they started closing quite a few of them. So I think they're probably much more in that profitable space. Let's see. I want to just take a peek back. Yeah, but I think that's what it is. Now they're starting to return money to shareholders because during the pandemic they expanded a little before the pandemic especially. They expanded super fast, trying to get their footprint all over the place. Started to look like an M pattern here, but I think this thing is going to be relatively solid. It is not a dividends play, so this thing can get fluctuated very fast. Let me see what their float is. Oops, I just closed it. Yeah, okay, so if this earnings, yeah, I would say wait for the earnings, but this could be a very strong company for a longer term investment, and they report early in the morning. And then the next one we're going to talk about is for tomorrow night, which is Fossil. Now, the reason why I like to always kind of chart Fossil, this has been on a decline. It's at OTC, and we're at the fumes of earnings in itself. But I owned a Fossil watch. I thought it was the coolest thing in itself as a kid, but you could kind of see its best days are behind them. So I like to kind of see what's going on with them. And again, I promise you, there is almost nothing out there. They could benefit from a reverse split. Let's see what their share float is. No, a reverse split might not be in the cards for them. But we got ourselves a EPS of negative, and this is the reason why this is like crap when it was positive back in 2022. So they're not making as much money, and it could be the fact that their financials are sucky. Let's see what their financials are. All right, we got some time. Where are your financials? Seasonality. There you go, financials. Cash flow negative. Don't want to see that. That's a problem. Income statement. Net income. Let's take it back a bit. Not good. Negative. Almost positive. Almost got out the way in 2022. Negative. Very small negative here, but wide in the negative there. Don't want to see that. So I would say for the most part, Mr. Fossil, or whoever is the CEO over there, you have yourselves a big problem over there. So I think that's probably 90% of the reason why it's there. They're probably getting shorted the crap out of over there. So maybe the only bit saving grace is a short squeeze and seeing how that results actually pan out. But yeah, Fossil, damn shame that they're where they are right now. I want to say they have bought a company too. Didn't they buy a company? Maybe they divested. But yeah, they did. Mind you, this was not high-end luxury, right? Jewelry, handbags, because I remember they had belts, but I really went for the watches. That's their main part, right? Maybe they divest into shoes and stuff. I didn't even know they did shoes. Maybe that's their problem. They have a factory outlet store. I do know that, so that way they can offload a lot of their junk. 1984, yeah, it just got ran to the ground, and unfortunately, it is where it is. Want to kind of recap or go back over is DoorDash. Let's see this one. I think where DoorDash is right now is probably in the best spot for a bounce. I like the company because, again, when you're returning money to shareholders, you're my friend. And when you do it, when you get more money, it lets me know that you're on the right track. But I do like to see doing less with more. I'm sorry, doing more with less. Doing more with less. So a negative revenue lets me know that they are proactive and being disciplined, and they start to control their hours. The biggest thing that can really destroy a company is not managing that revenue that comes in the doorway, right? So nice little retest to this breaker structure, probably a nice little setup where you can kind of hold around here. The problem I have with trying to get in here is that we are overheated on the weekly. Do we think that we can go ahead and recap this whole entire area? Maybe, but at the end of the day, we want to make sure we find a nice little sound space. So until this thing gives us a nice sound reversal, or maybe even going down to like the 2 hour where it starts to build a proper base, I don't see this thing taking off yet, but it is a good one to put on your watch list because I think this is a relatively strong company. All right, what else I got for y'all? Palantir. And part of me is like shoulda, coulda, woulda, and part of me is like it is what it is. I love where they are. I thought I could get it cheaper, like around 150, 150, 49, somewhere around here in this order block, and I would have been okay, like 156 the best. But this thing held 159, and I said, let me let the earnings pull it back in. That gap has left the building, and it's just continuing each and every day. Strong earnings because they are a billion-dollar company. I think that's part of their investment in itself. If they can go ahead and downside some of that, so that way they can go ahead and rebalance that EPS, that would be great. Also note that they are $2 billion and 2 billion shares floated, and that could go ahead and be a nice little stock buyback, so that way they could go ahead and rebalance that. So I'm very curious if they could go ahead and get that in line. All right, Disney did not do what I expected from the earnings. It was perfect. I like seeing this. That's what I was saying earlier. They're doing more with less, right? And what I don't like with what's going on with Disney here, it lets me know that whatever measure move we was looking for on this continuation is not actually coming to fruition. And we're probably going to get Disney under 100 if this momentum continues. I was looking for this trend to kind of hold its weight and kind of push itself. So I was waiting for this to kind of rebalance. Maybe they just came back because they forgot something, but you could kind of see, no, looks like they're just selling off because 120, 125 is a little overpriced. At least that's how the market deems it. And then dividends is coming up. Again, weak dividends anyhow, so you're not going to keep shareholders in there. Maybe up your dividends on your 1.6 billion shares and start cutting some costs somewhere so that we can make your shareholders happy and want to plug in their money. But if they don't care about the investment side and using that debt, then they won't make that adjustment. Hence, the price will be coming down. You know, low regard for shareholders. All right, Reddit is continuing. This surprise was a surprise, of course, and I thought we was going to still get a little bit of a pullback, but the pullback is nowhere to be found, and it looks like we're going to do a Robinhood type of action, which I kind of shot myself in the foot, saw a trade opportunity, and I was like, let me leave that alone, and maybe I should have, kind of second guessed that. I probably could have got a nice little piece off of this 187 going into that 222, but we can't cry over spilled opportunities. But yeah, generally speaking, it does look really, really good. I think we're going to get new highs, new all-time highs at that, especially with the way this MACD is looking on the weekly. Let's look at the monthly. As soon as all my information wants to kick in. Oh, actually, that is everything. It's so new that this is the best that we're going to get. So let's come back over to the weekly. Wait, why did the monthly look like it lost a lot of information between July and August? Very weird. Very weird. All right, so let's just stick with the week. So this weekly nice little move here. I think they're missing a whole week on the monthly chart. TradingView, fix that problem. All right, so nice little push into here. I would say if I was going to get a play now, it would be based on the MACD. And I think it's over for the most part, but we'll see. All right, so that said, I want to say thank you very much for being part of BYTTT and joining me in this amazing party where we go over these tickers. Don't forget to click the like, subscribe, and the bell button. It helps with the algorithms and really grows this channel. And I thank all my subscribers. I am at 340, so I am excited to get to that 500. And it's people just like you that helps me get there. So that said, thank you. Have a great day. See you tomorrow. Bye-bye.